Discussed, Emcure Pharma has seen a great amount of traction. So far, it's up almost 2x subscribed already, and we have Samit Mehta as well as Vikas Thapar joining us on the show, the top brass at Emcure Pharmaceuticals, to talk to us about what's happening at the company. Gentlemen, hi, good afternoon. Thanks so much for making time and speaking with us. Samit, let me first come to you and ask you, over the last 2 to 3 years, we have seen there has been a dip in the operating performance and the margins a bit, and that's led to the decline in profitability as well. Could you help our viewers understand as to the reason of that, and going forward, is this trend likely to reverse?
Sure. Thank you so much. First of all, good afternoon, and thank you for having us on the show. Specifically commenting on your question about the operating margins and the profitability. Couple of things that we'd like to point out. One is if you take the base year as FY22, there would be some amount of COVID noise there because there was that second wave when a lot of pharma companies saw a huge upsurge in sales, especially for products like vitamin C, zinc, for us even enoxaparin. So if I take that year aside, I think the growth has been steady. Specifically, if you talk about the margins, there's two factors. Number one is over the last 18 to 24 months, we have hired consciously in excess of 1,000 medical reps, both for geographic expansion and to enter some promising therapies. That's more than a 25% increase compared to the base that we had for medical reps. And I think by the time their productivity comes up to our standard level, it will take some time. So we do expect that to ramp up for sure. The other factor is that, again, there's been a second wave of CapEx, close to 1,200 crores, which has seen, again, over the last year and a half, 4 facilities getting commissioned. And those are currently in the stage of taking their validation batches, getting qualified. So by the time they reach optimal capacity utilization and get into commercial mode, that itself should also drive improvement in margins. And of course, the third point, which is stated in our documents, is that 600 crores of the primary is going to be for retirement of some portion of debt. And that should also contribute to reducing the financial cost, which should then eventually flow into the PAT and the EPS.
Samit, to kind of summarize that, you are expecting a bit of an uptick, but you also pointed out that it might take a bit of time. So should we expect a reversal in the trend of declining margins in FY25 itself, or it might be in FY26?
I believe the way the capacities are already getting utilized, as well as some of the more recent initiatives, including the distribution model that we have gone live with Sanofi, should see some robust growth.
Good afternoon, Samit. Good afternoon, Vikas. This is Vinny joining in the conversation as well. Vikas, I just want to get your view. Now, obviously, what we're seeing in terms of the IPO funds which will be used, some of them is going to be in terms of the repayment of debt. So how much would be the interest cost saving that you would be seeing? And given that saving coming in, where is the profit also that one could expect in terms of an indication that we would see in the next couple of years for the company?
Hi, Vinny. First of all, thank you for having me on the show. So just to build on what Samit was commenting, we highlighted that out of the 800 CR of primary raise, 600 crores is going towards retiring our current debt. Most of that debt would be anywhere from, let's say, 9 to 10% sort of average interest cost. So ballpark, you can estimate that reduction happening on the interest or finance cost side. And then, of course, we have a lot of bullish growth initiatives, both in the domestic market, where, as Samit rightly highlighted, both in terms of adding 1,000 reps, which is a significant addition to our base, and it was publicly announced that we'll be handling the entire Sanofi cardiac portfolio of products starting the start of this fiscal year, which is already with us. We should see some decent growth of the domestic business as a result of that. And obviously, as we achieve some economies of scale there, that should obviously help us in terms of the profitability profile of the domestic business as well. And then, of course, on the international side, which makes up about 52% of our total business, there again, this CapEx investments and the 4 new facilities getting commissioned was part of our growth strategy, looking at the short to midterm outlook. And we believe that with the additional opportunities in the various markets that we operate internationally, that should also bode well for the organization over the next 12 to 24 months as well.
That will be something that will be boding well for the company. I was going to ask on this new plans, but you did answer that for me, Vikas. I just want to know, Vikas, one more thing. You have acquired, the company has acquired Mantra Pharma as well. How do you see that also, the synergies from this acquisition coming in for the company? And by when is that actually going to start seeing in full terms for the top line of the company?
Yeah, so in fact, we concluded that transaction in October or November of last year. And so we did get some partial revenue recognition in FY24 itself, but we will get the benefit of the full year revenue recognition of that transaction in FY25. We're very excited about the transaction because we were already operating in the Canadian market through our entity Marcan, which was an initial acquisition we did sometime in 2015. The beauty of Mantra is that, they're very strong, particularly in the Quebec region of Canada, where Marcan did not have its own front-end presence. And so now with this acquisition, we really are addressing the entire Canadian market and a lot of synergies in terms of product portfolios that both the entities already have, which they can take to their respective parts of Canada, as well as, of course, Emcure's might with the back-end R&D and manufacturing capabilities we have to be able to give them many more products and a robust pipeline going forward. So we're very, very excited. 5 months in, we're very happy with integrating Mantra and the team to overall Emcure Group, and I think it bodes well for our future for the Canadian market.
Samit, before we wrap up the show, your focus on chronic therapies, what do you think will be the overall share and contribution of that? And if you have a target in mind for the India formulations market share that you would want to have, let's say 18 to 24 months out?
I think a lot of the strategies that we have implemented over the past few months have been in the direction of chronic, again, at the cost of repetition. The Sanofi distribution deal is also for cardiovascular products, which further strengthens and bolsters our presence there. In that context, chronic will continue to be a strong focus area. In fact, we've also taken specific steps to strengthen our presence in diabetology and CNS, both of which can be classified under chronic. So chronic definitely is going to be something that will be a growth driver. At the same time, acute also, we have a strong presence, especially through our subsidiary Zuventus, which has presence in respiratory, anti-infectives. So while the tilt will continue to bend more in terms of chronic, we won't be taking our eyes off acute. And I think all these initiatives should drive some robust growth in market share as well.
Okay, Vikas, thank you so much for joining in with us this afternoon on ET Now, and good luck for the IPO. First 2 days have surely been a bumper one so far, so good luck for the next day as well. But that was the management of Emcure for you all. 3rd July to 5th July is when the IPO is open for subscription. With that,
if you like this video, then like, share and subscribe to ET Now.